Hello and welcome. My name is Loraine Martinez Bellamy. I'm an attorney at the Connecticut Fair Housing Center, and today we're going to be talking about your post-forbearance options if you have a privately held or a conventional mortgage. That is usually how private mortgages are referred to, and we're just going to walk you through what your options may be in this situation. So you may or may not have been in a COVID-19 forbearance. Many lenders and servicers were and are offering COVID-19 forbearance just like the government insured options. And it's a temporary pause or reduction of your monthly mortgage payment available to borrowers who have experienced a pandemic related financial hardship. So contact your servicer to find out if the forbearance is still available to you. If you were in a forbearance and are now out of it, we're going to discuss your options. Option number one is a loan modification. This is an industry standard COVID-19 loan modification offered by some lenders post-forbearance. And this is modeled after Fannie Mae and Freddie Mac loan modification. I've seen it target 20% reduction in principal and interest after the servicer capitalizes your outstanding payments, adding them back to your current unpaid principal balance, resets your interest rate at the market rate. I will mention here that when it comes to interest rates, they have increased a lot during the pandemic. So you may have an interest rate that's lower than the current market rate. However, what I've seen with most private lenders is in order to access a loan modification on your privately held mortgage, you will have to accept the current market rate, which may be 5.5 or more. So that is something to keep in mind. And then the servicer will extend the term of your loan up to 40 years in order to make the payment affordable. The COVID-19 loan modification payments affordability is that target 20% reduction in your principal and interest. As I mentioned before, you just never know what your private lender is going to offer in terms of options, but you want to contact them and find out if they are offering COVID-19 loan modifications. Ask what the terms of those might be and expect that it might be something like what I've described here. Option number two is the MyHomeCT pandemic relief program. Unfortunately, for privately held mortgages, the options are very small. So you have the option of the COVID-19 forbearance when you first fell behind or experienced a hardship, then accessing that loan modification for COVID-19. And then this option is the pandemic relief program. These are federal funds that were sent to the state of Connecticut to help homeowners avoid foreclosure and get current on their mortgages and other housing expenses. So you can qualify for up to $50,000 in grant assistance to pay off outstanding mortgage payments, property taxes, homeowners insurance, water, sewer, or other utility bills, condo common charges or special assessments, or any fees advanced by your servicer on a reverse mortgage. Your financial hardship would have had to occur sometime between October 19 and present day. There is a cushion there for when the hardship began because the program administrators understand that some folks might have fallen behind in the fall of 2019 and had every intention and opportunity to catch up in the new year and did not expect to lose their employment or have their hours reduced by the pandemic, by COVID-19. So there is a cushion in there for when the hardship began. Your property must be your primary residence and be a 1 to 4 unit home. And your household income must be equal to or less than 150% of the area median income. I have linked here the tool that CHFA has provided so that homeowners can determine whether they meet this qualification. You'll be able to click on a map and find out what the area median income is in your town. If your mortgage arrearage exceeds the program maximum of $50,000, you should apply for MyHomeCT first and see if you can qualify for the $50,000. A specialist at MyHomeCT will help you. Contact your servicer and negotiate whatever excess and arrearage you have over $50,000. So say you owe $60,000 and there's a $10,000 difference. MyHomeCT specialist loss mitigation specialist will help you determine whether your servicer can offer you a repayment plan for the $10,000 or maybe a modification like we discussed before, but just for the $10,000 outstanding after the MyHomeCT funds are applied. Again, make sure you apply for MyHomeCT first, because if you accept a loan modification and bring your mortgage current and then apply for MyHomeCT, they may not prioritize. They may see that you're current on your mortgage and not prioritize your award versus other homeowners who still have outstanding balances and are at risk of foreclosure. If you have any questions about your options post-forbearance or you believe your servicer has mishandled your mortgage post-forbearance, please feel free to reach out to us. You can reach us at our intake line in both English and Spanish. If you require another language, you can ask and we will obtain a translator in that language. And you can also schedule a virtual advice session at the link below. This is a video conference with one of us attorneys to discuss your specific situation. Our mission at the Connecticut Fair Housing Center is to ensure that all people have equal access to housing opportunity in Connecticut that is free from discrimination. We focus on the intersection of poverty and housing discrimination. We also assist Connecticut homeowners who've been hardest hit by the nation's ongoing foreclosure crisis. So if you're experiencing any issues with foreclosure or you feel like you've been discriminated against in the rental process or by your landlord, please feel free to reach out to us. I hope this presentation has been helpful. Again, if you have any questions, feel free to call our intake line and or book a video conference with one of our attorneys. Thanks.